Hey everyone, this is Charles Breed on our weekly Wednesday DeepThinker. We have a 30-minute format to talk to some of the most brilliant minds in various industries, topics that are current event related. And also, I just kind of really dig these topics around financial technologies, the economy, whether it be Bitcoin, payments. So those have been the last couple of shows we've done so far. Really good speakers. Today we have a unique host. An interview. This gentleman was very, very early on at Yahoo, and he has been in all kinds of industries, such as the farming industry in the Central Valley of California, to financial payments, to commercial real estate investments, and probably his prime occupation, besides raising kids, is really in the payment processing space. So without any further ado, let me bring in Charlie Dadala. And Charlie is with QualPay, and I think he's got a very humble title of business development, when in fact I think you're on the board or co-founder or financier. So I think you downplay your title there, Charlie, but why don't we start with getting an overview on what QualPay is, what you do, and then how you're different, because most of the viewers immediately want to pigeonhole you and say, "Oh, are you like Stripe? Are you like PayPal? How are you different?" So if you could kind of give us the boundaries of what QualPay does or doesn't do, and then we'll get into the questions from there on.
Yeah, so we're a full-fledged payment processor doing connections through the ISV channel. And that's really the main focus of the company, focusing on the ISVs and leveraging a cloud-based platform that we've built from the ground up that does payment processing. So Charles, we did a deal in our last company when you were at Vindicia, when we were doing client-server stuff. We're doing similar type things, but now everything is done in the cloud.
Right.
And the channels we go after are software providers to various industries.
Right.
We focus on the subscription market quite a bit. We do a lot of gaming stuff. We do a lot of petroleum, recycling business, pest control, stuff like that. And it's a good business because they like our hands-on approach and they like our technology platform.
Great.
So we customize things, a lot of tweaks here and there on the fly for various partners, so that they can take this offering to their customer base.
Great.
And it works out pretty well. We've been doing it for about 5 years now, and have built a nice business. It's been affected a little bit by COVID in the sense that everybody's working from home, but we've got because we're all cloud-based, it's worked out really well. We haven't missed a beat, and things are, being built. We have regular calls. The business is growing, and the industries we were in are pretty COVID-proof. So
Right.
We're not into the restaurant or theater type industries. A lot of stuff, like I said, is subscription-based. So you've got that monthly bill, if it's a utility bill or a propane delivery. Excuse me. That stuff happens, typically monthly. There is seasonality in it, of course, with average ticket sales being, higher in the winter or higher in the summer, depending on where
Right.
you're at. And then we've got the gaming industry, which is another segment of our business, and those sales have actually gone up with the COVID because of people staying at home and needing a little bit of entertainment since they
Sure.
can't go out and doing sports. But it really is a very robust platform. Using those cloud technologies and just being able to push data through these API formats real time into this ISV sector. There's
Right.
thousands of ISVs out there. They all have their own focus of business that they do and the services they provide to their customers, whether it's CRM, financial management, merchandising, whatever. And then we layer on payments on that
Right.
for them. It's not their expertise, but it's ours, and we help them improve the billing cycles, lower the collection timeframes, and lower
Right.
the costs overall, because we can do credit card, debit card, and ACH, which is more and more prevalent out there. So
really, I thought ACH would be going away, not becoming more prevalent.
no, it's actually becoming more prevalent as you go into industries that have higher average tickets.
Yeah,
you run into a $300 and $400 monthly charge where they're delivering propane to your house. These companies taking $12 or 3% or 2.5%
yeah, they don't want to pay that
off the bottom line is real money, and it's a pretty tight margin business to begin with. So
just so all our viewers understand, I forget what ACH even stands for, but that means when it's usually initially instead of entering a credit card number expiration date, you're entering in your bank's routing number and your bank account, and then it's kind of like using a debit card but cheaper, and so you're pulling directly from my checking account that needs to have a positive balance as opposed to a credit. Is that right?
That's correct.
Is that only U.S. or?
It's U.S. only right now. Our focus is the U.S. market. That's plenty of opportunity for us. So we're really focused on that piece. And ACH is just one mechanism. There's all the credit card companies, so Visa, MasterCard, Amex, Discover, and the debit cards, and then ACH, which is a national product for the U.S. So
got it.
We've got all those.
So as you know, what we're doing live right now, this is streaming to YouTube, LinkedIn, Twitch, Facebook, Twitter, which is Periscope, Daily Motion, Smashcast. So whatever platform people are coming in on various social media. One of the questions you just answered was asked about cross-border international, and it sounds like you're primarily domestic right now. Another question I've got.
Well, let me clarify that, Charles.
Okay, go ahead.
We are domestic, but if you have a business in the U.S. or a gaming platform, we've got one gaming company. It's a pretty big one that they have probably 4,000 smaller gaming companies that they process for under their platform. So even though it's one account, we've got 4,000, individual businesses that they reconcile to.
Okay.
And most of their business, not most, probably a third or 40% of their business are cards from outside the U.S. So
sure.
You've got, card holders in the Philippines or the Netherlands, over 100 countries where we process transactions for daily and settle and reconcile with all the,
So are those solutions offered in U.S. dollars outside the U.S., or are they offered in local currency, and then you're doing some kind of a foreign currency exchange?
Both. It's however they want to present that transaction. So they can present it in dollars or in pounds or whatever.
Yeah, I never understood that, because it seems to me that if you sell something in some other country, it's almost, I don't know, it's almost derogatory to say, here's our products from the U.S. and you're selling them in the U.K. and you price it in U.S. dollars. I mean, yeah, people understand that the U.S. dollar is kind of the world currency reserve, but why make them do the math? It seems to be much easier to offer in local currencies.
Well, people like to see when they buy an amount and they click on it, that's the amount they want to see on the card. So
yeah, because
they do it in any different way that the client wants to. That's the beauty of working with us, is we've got a lot of flexibility, in the platform, and we could modify things, or here's the basic format, and it's a really good hands-on approach type of thing. Because payments are it's sophisticated, and we bring that sophistication into a real relationship-based, partnership.
Yeah, I remember I think I was at Heathrow back in the days when we used to be able to fly, and I was buying something at the airport, and the checkout clerk said, do you want to pay in dollars or British pounds sterling with the American Express? And they would run it either way. I thought that was kind of an interesting ask. Hey, so I got another question here coming in, which is, what are the top concerns that your merchants have? Is it fraud? Is it settlement? Is it regulatory stuff? So what are you hearing over and over again from your merchants, or is it analytics, or all the above? There's got to be some hierarchy of you hear the same. Why would I move on to QualPay because I'm having these 5 problems? What would those be?
Well, the main one, one of the more overlying themes that we do here is reconciliation. How can I take my payment data down to cash and really see how that $100 that I sold and how, $98 was put into my account, how does that settle?
But does that include revenue recognition under ASC 606 rules, or is that just are you settling within hours or days type of thing? And then there's taxation and refunds that drives the CFO crazy. I imagine you have to be plugged into all those back office financial apps to give an accurate picture to the CFO. So I don't know so I guess I don't understand the elements of reconciliation. Is it the instant thing, or is it the rev rec, or is it all the above?
No, it's all the above, but in the sense of rev rec, when it comes to accounting, it's really up to the company and how they want to manage their revenue and what they consider revenue that comes in.
Okay.
So we'll do the transaction and we'll process the transaction real time. And then, that night, next day, they'll have those funds hit their account. And we can either do something called daily settlement or monthly settlement. So we could take out the interchange fees on a daily basis, or do it on a monthly basis. So we have that kind of level of detail. We've also got refunds and chargebacks that are settled, daily through your deposits.
Right.
The beauty of the reconciliation part is if we're putting money in to your account and there was a chargeback, like if we put in $20,000 for yesterday's transactions into your checking account,
right?
You need to see, okay, where is that $20,000 coming from?
What product or what number of subscribers or what plan did they sign up? Or
they get attributed to? Oh, there were 3 chargebacks within those transactions that were netted out of there. How do I look at those? Do I want those in a separate account? Do I want them in the same account? So we can actually break that $20,000 how the merchant likes to see it.
Okay.
Templates of, hey, here's the $19,875 going into this account. Here's $125 fees going into another account, and here's the chargebacks of $212 that come out of another account, or if they're cleared, go into another account. So it's very sophisticated, and the CFOs and controllers love it because we tweak our systems to push the data the way they want the data. So that's an overlying theme of the platform, is the reporting side of things. And it nets out every day to 0. So we collect everybody's transactions, run them through the Visa, MasterCard, Amex, Discover networks, process them, and then pull them back in and settle with the merchants. Then it comes out, reconciles perfectly.
Right. Okay. So to keep you back on track, top concern, you said reconciliation, you threw in reports. Is there something where your fees are cheaper than everybody else? Is there something,
we're competitive,
uptime, or?
Yeah, we're definitely competitive on the fees. So we work with all kinds of people on different pricing things out there. Every industry has different things they like to focus on. If you go after the gaming industry, they really like their high approval rates because they're selling digital goods. So they're really keen on the approval rates. Hey, how do we get the best approval rates? And we've got formulas and ways we can kind of work on improving that. If you're in the propane delivery service, well, they want to make sure that the credit card is good for $500 before they send a truck out there to go load up the tank. So,
but approval rates relate more back to credit and debit cards, not ACH. Or I guess if you're doing an ACH withdrawal and the person has no money in their checking account, that's not an approval rate. That's just an insufficient fund thing. Uh,
Right.
so you just brought up an example. So let's say I'm getting propane to my house. I have $5 in my checking account. I assure you, my propane bill is north of $200 every time. Would they check something with you before they roll the truck to my house and fill my tank for $200, or does they just roll the tank, fill my tank, and go, oh shit, this it's a $200 charge. We're doing an ACH, and we can only get $5. Did you help
It's well,
with
if
that
it's
at all?
well, what happened? Every merchant's different. So
Yeah,
that merchant would say, "Oh, it's Charles Breed. He's been a customer of ours for 3 years.
right.
We know he's good for it." So
Yeah, but my bank account may have zero in it.
yeah, no, I know. Then
Yeah,
they'll send the bill out, and you end up not paying it. But with a credit card, so if it's a credit card, why they like a credit card in that instance is they would off the credit card for
oh,
300
pre-auth it.
or 200 pre-auth it, and then they would go to your house and fill the tank up
Dude.
and say, "Oh, it's $192." So they would reverse the $200
Yeah,
offer
yeah,
and recharge it for 192, and then settle it that night
yeah,
for
yeah. So
192. So those kinds of little tweaks, I mean, they're not inconsequential. They're very
no, collections is a huge thing, but
it's
on
huge,
that,
and you have
on
to be exact, and we are,
yeah,
capable of doing these kinds of things with that ISV. So that ISV, that
right,
software vendor, has 400 clients that they service, and 400 merchants, 400 businesses, and each of those 400 businesses has 400 clients. So now you're
right,
dealing
right.
with,
But
exponential
but
numbers.
under that same example, so I'm delivering these utilities. Would you prefer to have my ACH on record or a credit card on record for that example you just said?
It
Or
depends.
ideally, you want both. You probably want ACH as the primary because it's cheaper. You don't have to pay the fees are cheaper for ACH. And then if the bank account has no money, you've got a Visa card as a backup. But now you've got me thinking. I thought ACH was the fastest way to pick anybody's pocket, and credit cards were a little bit more
Yeah.
indirect.
Yeah.
But now I'm thinking differently. So
Well, it all depends. I mean, merchants like to give their customers choices and
yeah,
just say, hey, use whatever is most convenient for you. But some industries that have thinner margins tend to, say, well, you know what? I need to just do it on ACH. I can't
yeah,
afford, $1,000 bill, for example, in that business might be worth it just to do ACH.
yeah.
Because it's one of those businesses where, hey, they're going to buy it regardless because they need this product from me.
Look, I'm amazed at how many retailers have no idea what their fees are, or at least the store managers don't. Because I bring in a debit credit card, and I thought that if they run it as a debit card and I put in a PIN, that is a lot cheaper than if it's run as a credit card and I sign something. And a lot of times they're like, "Oh yeah, I don't know, do whatever, man." Um, but running a debit card is cheaper than running a credit card on fees. Isn't that typically right or
Yeah,
not?
that's right.
Yeah, okay.
Especially
Because of fraud. It's all about fraud.
well, it's all about days outstanding and collections and basically for the merchant getting their money quicker.
Yeah,
So,
yeah. So on a debit card, they're going to get their money faster, and entering a 4-digit PIN or even a billing zip code has got to add more fraud prevention than me scribbling, Donald Trump on my signature pad, which I think they would take. I mean,
yeah.
I could sign Mickey Mouse on the keypad, and I think the transaction would still go through. I don't even know why we sign stuff anymore.
No,
No one looks at it.
it is.
And
I mean, MasterCard is getting rid of that requirement. So
yeah, there are a lot of online merchants and physical merchants that still stall the queue and ask dumb ass questions. Do you want to donate some money? Do you want cash back? My favorite is this amount correct? So I go to the hardware store and it says, $102.35. Is this correct? Well, What do you want me to do? Break out a calculator and add it up myself? I don't know if it's. I guess it's correct. I didn't do
Well,
the math.
it's more for reasonableness, that it's not, $1,002 instead of,
Listen, when you go to the hardware store with me, sometimes it's $1,000, and I'm like, "What the hell did I buy?"
Yeah, I know.
And I can rack up $1,000 and still stick it into one shopping bag at Home Depot or Lowe's. So I'm being asked here about what's the average size merchant you guys like to deal with. I doubt you're dealing with ma and pa donut shops that have a $100 turn per month. And so, is there a sweet spot size customer that you deal with?
The sweet spot's about $100,000 a month in sales.
Okay,
is kind of the sweet spot. We've got a merchant that's doing 10 million a month, and another merchant that's doing $1,000 a month. So it really depends on on the channel and who comes in. But on an average, it's about $1 million a month.
Okay.
And then pricing is flexible. We've got, really good pricing. We've got a product called, interchange repair, basically that if somebody's using a business card or a corporate card or a purchasing card, for example, pay for something, those transactions, just because of that card number, can layer on another 30 to 100 basis points of fees from the card companies if you don't include what they call level 3 data elements. And we help the merchants plug in those elements systematically, to help just drop those fees. Because those fees just get passed through from us to the card companies. And if we could find ways to save money for the merchants, that's what we're all about. Really, we have our hand with them.
So for those watching, interchange fees make rocket science look easy. So depending on the issuing bank, the time of day, the type of product, the industry code, the merchant ID number, the dollar amount, the balance, is a signature card or debit card or prepaid card, the fees that the Visa mafia charge you are extremely complicated. So I imagine you're doing is it an interchange fee plus type pricing model you do?
Yeah, that's one we do. We can have a fixed fee pricing model or an interchange plus pricing model.
Okay, got it.
Definitely. But we're always aligned with the merchant to help drop those fees as much as possible.
Okay.
And work with the merchant in terms of trying to increase approval rates or streamline, double authorizations, triple authorizations. Sometimes the systems on their end are, the customers are clicking enter, enter, enter.
Oh, yeah.
And, those fees, they add up, and those go to the card companies. But if we can help them analyze their statements, which we're very happy to do. If anybody on here wants, a complimentary statement analysis, we'll just send us a couple of months worth of your statements, to charlie@qualpay.com. And, we'll come back with, hey, here's what you can do. Here's how we can work with you to help fee reduction and stuff like that.
Yeah, we'll put information in our chat. It's qualpay.com. It's easy to get a hold of these guys. You said something I didn't even know was true. So if I'm online buying something and I click and I don't think anything's happening, and I click again and I click again, I usually only get charged once for the item, if it's sent out. But what you're saying is there might be, by doing that, you might be kind of screwing the merchant by having them run the card multiple times?
Yeah, that's true.
Oh, I didn't even know that.
Huh. Yeah, because you're doing an authorization request
every time you hit the button. That's why sometimes they tell you don't keep clicking the button.
Exactly.
Wait a minute.
They wait 5 seconds, or if they get declined, they might enter the card number again. And again, those are charges to the merchants.
And then you can back those out and say, look, you can't charge this merchant 3 times for the same payment. So that's what you're helping them with. That's got to be an automated system. I mean, that's not a person reading those records. So
there's rules that we've got, and we check things like that. And even on the merchant's monthly statements, we'll look at the number of authorizations versus the number of settled transactions, and that gives you a ratio.
Right.
And 5 to 10% is typical. It's not uncommon, but if it's 200% or 150%, you're like, whoa, wait a minute. You're paying some extra fees here. Let's look at how your systems are connecting. Where is something maybe timing out, or how we can improve that.
Right. So we got two more questions here as we come up on the 30-minute mark. One of them is about your development team, where they're located, and then, so I think you guys are you all in San Mateo? Do you have offshore stuff, or is everybody there?
Well, we're headquartered here. We don't offshore anything. All our engineers are based in the U.S. Most are in the Bay Area. We've got a couple in Portland, a couple in Seattle.
Got it.
We got, I think, Vegas and actually one in Austin. So,
okay.
Anyway,
and then the next question is COVID been good for your business, bad for your business, or has it changed the way you do business at all? I saw your office there being kind of empty, so I get the work from home thing, but is there been a fundamental change in the payment business given COVID? I did talk to one of our mutual friends who's over at WorldPay, and his clients were all hospitality. I mean, they were hotels only.
Hammer.
Yeah. Oh my God. Yeah. So it was Mr. Tobin, and he says, "Yeah, I'm not doing it. It's just, it's like the Maytag repairman. There's no one to talk to." So, so how is the COVID been to you guys?
Wise, it's our business is up actually overall a little bit. Okay. So, and it's all sector driven. So we don't really have restaurants or theater or sporting events, which got hammered. So like I said, we've got a lot of gaming, a lot of subscription stuff in that ISV channel with propane, energy, recycling, pest control. Those are all on monthly charges.
People need all that stuff regardless of COVID.
Those have been pretty flat. The gaming's been up about 20% or so, and some of the other stuff in the business down a little bit, but overall it's up. So that part's good. On the COVID side, everybody's working from home. I'm in the office today. I come in 1 or 2 days a week, and other 1 or 2 other guys come in 1 or 2 days a week, and we basically well,
that's because you can walk to work basically too. So
the walk to work, and it's get out of the house so I don't just knock on the fridge door every 5 minutes, and get something to eat. But we're structured in a way, company-wise and organizationally, where it's very functional. Everyone's working at home. There's Zoom calls every day. The product folks, which are the most affected, because I think the product people really have to have more of that face-to-face time.
Sure,
working out really well. The salespeople are always on the phone anyway, making phone calls, and biz dev is just a euphemism for sales. So
it is.
You're either building something or selling something. And the folks that are building stuff are continuing to build great products, great features, working with partners, and all the requests are being delivered. So we've got a great roadmap and a great product platform, so.
Well, I'm glad to hear you guys are doing well through these times. I'd say, half the population is not doing well through these times. It is, there's a lot of uncertainty and anxiety of, when to open and how to open and should we open, and it's quite a debate. But digital everything is here to stay. We knew that before COVID. It's just getting proved with COVID. So whether it's video conferencing or e-commerce, this is going to stick with us regardless of a vaccine or not.
Yeah.
So we're here at the bottom of the hour. Charlie, I want to thank you greatly for joining DeepThinker, and appreciate your insights. And what we're going to do, we will go out with a video that QualPay did a few years ago. It's still relevant today, so we'll end with that video. And if anyone has any questions, comments, or business opportunities, you can certainly reach out to Charlie Jadala at QualPay. And again, I'd like to thank everybody for joining this Wednesday, and we'll be back again next week. So stay tuned for the cool little video clip, and we'll call it a wrap.
Thanks,
everyone. Thank you.
Sally sells seashells at her store, Seashore Shells, and online at seashoreshells.com. Sally has trouble tracking customer transactions. She gets confused trying to follow in-store versus online sales. She can't match transactions from sale to deposit in her bank account. How much does she pay for fees, and what are the fees for? How can she track disputes, chargebacks, and customer returns? Sally has trouble because most credit card transactions involve multiple intermediaries to process one transaction, regardless whether you're selling only online or through other channels such as in-store or phone. Most intermediaries provide their own reports with varying formats, most charging their own fees. Sally must sort through the different reports to follow a transaction from start to finish. QualPay is different. We combine multiple intermediaries into one to provide end-to-end reporting from transaction to cash to help Sally follow her money. Sally switches to QualPay and now uses their robust report to easily match her sales to deposits in the reconciliation report. Sally can search for individual transactions and follow them from sales or returns to deposit. The dispute dashboard gives Sally a view of a dispute status, and now she can clearly see when she needs to take any actions to manage the dispute process. Fees are clearly shown by transaction, batch, day, month, or year. Having all the reports in one place makes tax reporting a breeze. Now, Sally follows her sales to deposits and understands her fees and cash flow. Sally saves serious time and now spends more time doing what she loves, selling seashells. Contact us for a free demo.